In this video, we will look at how the listing of Zbcn coin on the new stock exchange and partnering with a very large coin affects Zbcn coin. Let's see if Zbcn goes higher before we look at the new stock market listing and partnership. Watch to the end so you don't miss anything. The uptrend from the downside suggests that the price has formed a strong support area and should react at this level. This kind of uptrend means that the price is stuck at a certain level, and this level is working as support. If the price touches this ascending trend line, one can expect to buy at this level and continue the uptrend as before. Such support levels are usually watched carefully by traders, as these points are considered to be areas where the price has the potential to reverse. If the price doesn't break below this uptrend and starts an upward movement after testing this level, this could indicate that the market is gaining upward momentum. If the price touches the trend, you can consider it as an opportunity. This support point marks an important zone, especially associated with the previous price action. If the price approaches it, it is likely that this support level will create a strong reaction area. This is because it served as the resistance point of the two previous tops. This indicates that the market has already tested this level, and significant selling pressure has formed there. Support and resistance points are known as areas of intense buying and selling pressure, where the price constantly reacts. In this case, the price reaching the resistance point formed by the two peaks could be an opportunity for buyers to step in and reduce the selling pressure. That is, a point that previously acted as resistance at this level may now function as a support level as the price moves downwards. This area can be considered as a place to buy. The bullish order block on the lower side of the price forms a particularly important support area. Such order blocks are formed in areas where traders are buying and large purchases occur, based on the previous movements of the price. The bullish order block is usually a zone that allows buyers to step in if the price approaches this level. This is because the buying pressure from previous price movements has been supported by the trading volume in this area, causing the price to move upwards. The presence of this order block means that as the price approaches this zone, buyers may become active. When the bullish order block is touched, buyers can stop the price from falling and start an upward movement. This is because buyers usually prefer to buy again at these levels where the price has already risen, which allows the market to stabilize. The bullish order block is already right where the support is. The bearish order block at the top is an area where selling pressure was intense in previous price action. This is a level where buyers remain weak and sellers are more dominant. As the price approaches this level, it can be expected to meet strong resistance, as sellers usually start positioning more aggressively in such zones. Bearish order blocks are usually located near previous higher price levels, and these levels are considered as a potential turning point, especially based on technical analysis. The selling pressure in this area may be aimed at preventing the price from making higher highs. Therefore, it is necessary to be cautious in case the price approaches the bearish order block, as here buyers may be forced and the price may start retracing. The bearish order block can be an area that can change the direction of the trend and make the price enter a bearish trend again. The bearish order block is very difficult to break the bearish order block the first time, but it can be broken after a few attempts. In the Elliott wave theory, the completion of the first and second wave is a strong signal for the start of the third wave. The third wave is usually considered the strongest wave and follows the main direction of the trend. This wave is the period when the market often experiences the largest price movement. Currently, the price is forming the third wave, and this wave should reach the minimum Fibonacci target of 1,618. The Fibonacci 1,618 level is an indication in the Elliott wave theory that a wave has started to expand strongly and the market is moving towards an important target. Reaching this level indicates that the bullish momentum continues and the price has the potential to move higher. If the price crosses the 1,618 level and holds at this level, the chances of heading for bigger targets increase. And the third wave comes out of nowhere, and no one knows what happened. A flag pattern is a structure that usually forms after a strong trend and has the potential to continue in the current direction of the price. This pattern shows a small consolidation process after an uptrend. The price is delimited by a narrowing triangle of lines inside the flag pattern. This narrowing indicates uncertainty in the market and the ongoing struggle between selling and buying. However, the main feature of the flag pattern is a breakout at the end of this consolidation zone. The target of a flag pattern is determined by measuring the length of the pattern. This measurement takes the height of the rise at the beginning of the flag and adds it to the breakout point at the top of the pattern. This target usually gives a strong signal that the uptrend will continue, giving a clearer indication of the direction of the price. If the price breaks through the upper boundary of the flag, it can move quickly towards the target. And if the upper line breakout comes, it means that the target is reached. An ascending channel structure is usually indicative of a strong uptrend. This channel is a pattern where the price moves between two parallel lines. One line determines the upper boundary of the price, and the other the lower boundary. Within the ascending channel, the price tends to move upwards continuously, but within the boundaries of the channel. The fact that the price is currently hovering around the middle band indicates a situation where the movement inside the channel has reached equilibrium. That is, the price is oscillating between the upper and lower boundaries of the channel and has not yet broken them. The mid-band can be considered as a kind of equilibrium zone because the price is neither moving exactly up nor down. If the price continues to stay at this level, traders usually continue to watch it carefully to determine in which direction the price will move. If the price starts moving towards the upper band of the channel, this could be a bullish signal. Conversely, a move towards the lower band could be a bearish signal. Breaking out of the channel can be a harbinger of a major uptrend. Need to follow. The Bollinger Band is a powerful tool used to measure price volatility and potential turning points. If the price oscillates below the middle band of the Bollinger Band, this can often indicate oversold or excessive volatility. Price oscillating below the middle band of the Bollinger Band can be an important observation point for traders. This is because it indicates that the price has made a downward move from previous levels. However, usually after such a swing, the price moves towards the lower band of the Bollinger Band and waits for a reaction. So when the price touches the lower band, it may find strong support and start to move higher. Touching the lower boundary of the Bollinger Band may signal oversold conditions, which may herald a reversal. In this case, the price testing the lower band could mean that buying pressure could increase, and the price could make a bounce above the middle band, and the Bollinger Band is slowly narrowing as if preparing for a big breakout. The MACD indicator shows the difference between short-term and long-term moving averages and how this difference changes over time. Whether the MACD is above or below the 0 point plays a critical role in understanding which direction the market is moving. In the current situation, a top-to-bottom crossover of the MACD could be a sign of market weakness or a potential reversal. This usually signals that selling pressure may increase or bullish momentum may weaken. However, the MACD is still above the 0 point. This suggests that the overall trend is still bullish and that buyers may still be in control of the market. The MACD above 0 is a warning that the uptrend is still likely to continue, but the momentum is weakening. If it crosses upwards again without going below 0, it may be willing to give the upside another try. There is currently a prominent support area on the RSI indicator. This support zone is an area where the RSI has reacted and initiated upward movements several times in previous price action. This suggests that the support area is a strong area, and a potential reversal could occur when the price is near this level. If the RSI moves towards this support point, it could signal an area in the market where buyers could step in. If the RSI bounces upwards when it hits this support zone, it could signal a buying opportunity. Because there have been bounces off this support point before, investors may see this level as an opportunity and buy. This kind of reaction could allow the price to move upwards. Remember that the RSI and the price move in the same direction, so when it bounces off it, the price will also increase. The vortex indicator is a momentum indicator that helps to understand the direction and strength of price movement. It contains two lines, the blue line and the red line. These lines indicate whether the market is in a bullish or bearish trend. The blue line signals that the price is going up, while the red line signals that the price is going down. In this indicator, a blue line crossing the red line from top to bottom can be interpreted as a bearish signal, while a red line crossing the blue line from top to bottom can be interpreted as a bullish signal. Currently, the red line is at the top of the vortex indicator, indicating that the market is bearish. The red line on the upper side indicates that there is a selling pressure in the market, and the price is in a bearish trend. However, this may change. If the blue line crosses the red line to the upside, this indicates that there may be a change in the market trend, and the uptrend may begin. This is usually considered a strong buy signal because when the blue line crosses the red line upwards, it shows that the market is in an uptrend, and buyers are starting to dominate. We should wait for the blue to go up for an uptrend. The fact that the price is currently far away from the 200 EMA may indicate that the market may be entering an overbought or oversold zone. The 200 EMA is considered an important indicator for determining the overall market trend. If the price is well above or below the 200 EMA, it usually indicates that there are extreme price movements and the market may be due for a correction or retest. As time passes, the price is likely to move closer towards the 200 EMA. This is because the excessive movement of the price may create a desire for the market to stabilize, which may lead to a retracement back to the 200 EMA. The 200 EMA is considered the equilibrium point of the market, and it is usually expected that prices will consolidate there. If the price comes back towards the 200 EMA after some time, the probability of a retest here increases. Retesting means that the price breaks a level and then goes back and tests it. This is used to confirm the solidity of a resistance or support level in the market. If the price has broken the 200 EMA and then retests back to this level, it could mean that the market has recognized this level as support, and the price will get a solid reaction here, and is expected to continue its upward uptrend after retesting. Zbcn has partnered with Stellar and Circle. This collaboration represents a major innovation, especially for cross-border remittances and payments. By leveraging powerful networks like Stellar and Circle, Zbcn will make it easier and more accessible to both receive payments and transact with stablecoins. The combination of these technologies will make life easier for millions of people. In particular, it will be a major step forward in enabling those without access to financial services to participate in commerce around the world. Zbcn's growth with such strategic partnerships will both expand its user base and help it become a major player in the cryptocurrency world in the long run. And this is very good news for the development of Zbcn coin. Partnership with a major coin like Stellar is a super thing. The second news is that Zbcn is listed on the Bitunix exchange, which opens up many more opportunities for the Zbcn coin. Being traded on such major exchanges not only increases the value of the coin, but also gives it more recognition and trust from the community. Bitunix's user base is quite large and active, which means potentially more trading volume and liquidity for Zbcn. Furthermore, a listing on Bitunix could increase the likelihood of Zbcn entering into collaborations with other major exchanges, as major exchanges often take into account a coin's potential and emerging market. Such developments could not only trigger a price increase in the short term, but also lay an important foundation for the long-term sustainability of the project. Further market recognition of Zbcn provides a huge advantage to attract more investors and users. If Zbcn's listing on Bitunix is a start, the likelihood of listings on other major exchanges will increase, which could lead to investors favoring Zbcn even more. This listing will lead to increased volume, and as the volume increases, the coin will become even more popular. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.